being mindful that most people would be on lunchtime right now. This session is being recorded, and we'll be sharing the recording towards maybe by the end of this week or early next week. Before we start, I would like to do an acknowledgement of country. So I'm at Western Sydney University's campus in Parramatta today. So Western Sydney University acknowledge that today's meeting is being held on the country of the Darug people of the Darug Nation, and acknowledges their ancestors who have been traditional owners of a country for thousands of years. Western Sydney University also wishes to acknowledge and pay our respect to the Darug people's elders past and present. The sponsor for this event is Western Sydney University, and we have a support of CPA Australia to actually run these discussion groups. We'll be taking questions at the end of the sessions, and those who are online, feel free to type your questions in the chat box, and we'll take them after Eric has presented his talk today. So our presenter is Eric Lee from the ACNC. He'll be talking about ACNC legislative changes and reporting requirements. Eric is one of the senior accountants working in the Reporting and Red Tape Reduction Directorate of the ACNC. He became a full CPA member in 2011 and has been working in the not-for-profit regulatory space at the ACNC, but is, as most of you would know, the national regulator of charities for more than 7 years. Previously, Eric had 4 years of experience working at the Australian Taxation Office across various business lines. So over to you, Eric.
Thanks, Yushi. Thanks for the introductions and inviting the ACNCs to speak at this forum. Before I start, I would also like to acknowledge the Kuna Nation people, the traditional custodians on the land on which I'm joining you today, and I pay my respects to their elders, past and present. And I would also like to extend that respect to all the Aboriginal and Torres Strait Islanders people that are joining us today. Well, it's always good to engage with the sector, especially today with all the smart brains in the room and online. I would like to say, Yushi, you are very organized, and we arranged this quite some time ago, and at the time I committed to do this virtually, and I should have chosen to present this in person. It has been a while since I traveled outside Melbourne, and I know Melbourne was less welcome to other states at one point. But the good thing is we couldn't possibly imagine we can have so many meetings or presentation in this sort of hybrid style. So we can reach more audience and we can engage wider. I was super ambitious and eager to, without realizing I sent through over 30-page slide deck, and I will aim to cover them and fly through some of the contents in 35 minutes. And I know today is not about me talking, it's more about the interactions that we have, trying to address or discuss as many questions as possible towards the end. And sometimes I can't promise I know all the answers on top of my head. I included in an email in the last slide, and we welcome all the questions to reporting@acnc.gov.au. If we don't have time to cover it today, it's completely fine to share the slides with all other participants, and feel free to share it with your colleagues and others who might have an interest with the ACNC reporting. So, as Yushi alluded earlier, the agenda today is to cover what the new reporting requirements are, and I will explain what they are, what it means in practice, how charities should prepare for them, and when they apply, and I guess a bit of why, so people understand why we do what we do. So, as you may be aware, the amendments to the ACNC regulations took place in November last year. Effectively, the ACNC reporting thresholds have been lifted or increased to reduce the red tape for the sector. The ACNC reporting thresholds are based on the size of a charity. So it is determined by a charity's annual revenue, and the size of a small charity has now doubled from $250,000 to $500,000. and the size for a large charity has tripled from $1 million to $3 million. The size of a medium charity is the amount in the middle between 500K up to $3 million. What it means is that less charities are subject to an external assurance because small charities is not required to prepare any financial report. And more charities will be in the medium categories that can choose to have a review rather than an audit. Or this is also on the basis that their own constitution or their governing documents does not require an audit, or they don't have any other audit requirements for their funding accrual process or any other reporting obligations. So moving on to the next slide. At the same time, lifting the reporting thresholds for the ACNC charities to reduce red tape, there are a couple of areas as a result from the recommendations in the ACNC legislation review. It was conducted in 2018 by an independent review panel. They have also introduced additional reporting of related party transactions and key management personnel remunerations. So it also gives an option for small charities that are using cash accounting to use narrative, for example, as an alternative to describe their assets and liabilities. It is easier for charity to describe some of their resources and commitments. Sometimes it is really challenging to evaluate the assets that they are holding. And sometimes many charities don't have the technical expertise to evaluate an asset that they hold, and let alone those terms are more for accrual accountings, and they might not be really appropriate for charities using cash accountings, for small charities, I mean. But the main focus today, we will talk about key management personnel remuneration and the related party transactions. So key management personnel remuneration, this is from the 2022 annual information statement reporting period. It only applies to charities in the large size bracket. So it's for charities with an annual revenue of 3 million or above. We may have a question right there. Well, the slide deck says this changed from 1st of July 2022. Isn't it the 2023 financial year, ending 30th of June 2023 being the first year of this requirement? I think this is the typical way of accountants looking at a reporting period. But when the Commonwealth Treasury makes this announcement, it actually means the time from when the ACNC will start to collect such information from the sector. So when it says from 1st of July 2022, it means for the preceding financial year ending 30th of June 2022, when key management personnel remuneration is required. I suppose it's good to clarify the time frame because we do have some questions about these ambiguities because of the start date when this will start to apply. And if we move to the next one, this is about reporting of related party transactions. So, well, as you can tell, the reporting of key management personnel remuneration is 1 year earlier than reporting related party transactions. And the reporting of related party transactions applies to charities of all sizes. So some rationale as to why they have a different start time I think is mainly because large charities would have implemented, for example, single touch payroll. They are in a better position to report key management personnel remuneration because they have existing data on hand. But in comparison, related party transactions can be a really challenging concept for many charities, especially the small end of the town, to understand what it means and more importantly, to be in a position to report on it. So let's quickly cover the reason why these additional reporting requirements have been introduced into the ACNC regulatory framework. The reason of introducing the key management key management personnel remuneration is to provide greater transparencies and publishing this information on the ACNC register. Having that piece of information in the public domain will help the public trust and confidence of the sector being transparent. Again, this is from the recommendation 15 of the ACNC legislation review conducted by the independent expert panel. And we also received the government support through the amendment of legislation of the ACNC to collect this information. Talking about the related party transactions, in terms of related party transactions, it shared the similar sort of rationale to promote transparency and make this information available on the ACNC register. And more specifically, this disclosure is looking at some transactions which can be in a higher risk category that some of the charitable resources could be likely to be misused for private benefits. So this is a quick one. We will start to unpack the key management personnel remuneration in a bit more details. So the definition, what is a key management personnel? It is not a new ACNC definition. It is an existing definition under the Australian Accounting Standards Board AASB 124, and it has been used in practice. So the key management personnel are the people with the authority and responsibility for planning, directing, and controlling the activities of an entity directly or indirectly, including whether an executive or non-executive directors of an entity. So in another word, it means they are senior decision makers in a charity. It does not include team leaders or a sub-operational manager, but it does capture all the responsible people of a charity, and we publish all the names of responsible people of a charity on our ACNC register. And it also includes all the senior executives, including, for example, the Chief Executive Officer, the CFO, or the Chief Operating Officer there. So looking at the next slide, what the large charities will need to report on is the total remuneration paid to their key management personnel. The Australian Accounting Standards Board standard use the terminology, I think is called compensation. It means the same here when we use remuneration. It includes all forms of consideration paid in exchange for a key management personnel's service to the charities. For example, that will include all the salaries and wages, superannuation, employer superannuation guarantee, leave entitlements, allowances, non-monetary benefits, and it also include other fringe benefits, for example, use of a charity's vehicle, discounted goods or services, or any other medical care provided by the charity as well. I think it's also worthwhile to point out the scope of key management personnel remuneration also include payments from a charity to a separate management entity that provide this sort of service to the charity. So this is consistent with the, This is also consistent with the Australian accounting standards because it is an existing requirement. If the separate management entity also provide other services such as bookkeeping or IT support, and the fees paid by the charity is covered by a single fee to that separate management entity, the charity can use a reasonable method, for example, based on the amount by the hours or a percentage of that single fee to calculate the cost to a key management personnel being a separate management entity. Or sometimes if it is impracticable to separate it, just simply include the total fees. That's also acceptable. So let's look at the next slide. In general speaking, unless an exemption applies, Yes, in terms of exemptions, I should have mentioned it earlier. Charities that are basic religious charities with only one registered subtype approved by the ACNC of advancing religion and satisfy are the criteria to qualify as a basic religious charity, for example, like a church. They are not required to report any key management personnel remuneration or any related party transactions unless they choose to voluntarily disclose those information. And for key management personnel remuneration, because it may give rise to privacy concerns, there's an exemption within the ACNC regulation that is about if a large charity pays only one key management individual, not a separate management entity, but an individual person as key management personnel, it is not required to disclose the amount in their special purpose financial statements. So that is mainly because of the privacy concerns. And the ACNC commissioner had also exercised discretion not to require the subcategories under the AASB 124, I think it's for paragraph 17, that includes a breakdown of the remuneration about short-term benefits, post-employment benefit, termination benefits, and others. So they are not required to disclose the breakdown of it because only the aggregated total is required. This is also consistent to the AASB 1060, the Simplified Disclosure Framework, and the ACNC review recommendation for the total for a single aggregated total only. And another exemption that I think I would want to mention is also the discretion has been exercised not to require a comparative figure for the preceding reporting period when a large charity is the first time adopting AASB 124 or 1060. So with all being said, it's more important to get ready. And how can charity prepare for these? I think understanding the requirement is the key. For accountants, auditors, and professional advisors to a charity, please promote the awareness of these new legislative requirements. Have a board or a committee level discussion, ensure those charged with governance understand the requirements in details, and ensure an appropriate disclosure note is included in the charity's annual financial report if they are a medium or a large size charity. For any large charities that have already submitted their 2022 annual information statement, they would have seen some new key management personnel questions that we collect, and the answers are published on our register. Looking at this slide, again, be prepared and ensure you know the new requirements, ensure your charity clients understand what is required, and we have developed plenty ACNC guidance, and one of the links is at acnc.gov.au/KMP. We did a lot of consultation in relation to those guidance, and we spoke to a lot of charities, a lot of people that support charities to make sure it's meaningful and it is helpful. So it is really a bit of a one-stop shop there because it includes all the information about who key management personnel are and what the remuneration includes. It has got information about the separate management entity that I mentioned, that I talked about earlier. It also includes all the exemptions that I mentioned and what the reporting obligations are in the financial reports. And I think that there are some examples towards the end of that guidance which you can think about. Well, does it apply to my charity? Does it apply to my charity clients? And they are really, really practical ways to think about what it means for my organization. Okay, so now before I delve into the related party transactions, I would like to see if there are any questions from anyone in the room or in the chat about key management personnel. We can spend 5 minutes to discuss any questions that may have arisen. Yushi?
Yep. Do we have any questions in the room? We do have 2 questions on chat. No, not in the room. Okay, on the chat box, we did have 2 questions. So the first one is from Jess, and she's asking, what about if a KMP, so key management personnel, is a volunteer, so unpaid? Does this fit under the definition and needs to be reported?
No. The scope of reporting key management personnel remuneration is only for an individual that is remunerated. So if your charity has a board of board members or committee members, and assuming only one is paid and only one person is remunerated and the rest are working on a pro bono basis, so that exemption will apply because the reporting requirements is about that remunerated person. So hopefully that explains the question. Being a volunteer as a key management personnel working in a charity is not captured. I know it satisfies the definition of key management personnel here, but the reporting is only about if there's any compensation or remuneration paid to that person. If it is none, then it is out of scope.
Okay, thank you, Eric. We also have a question from Nina. And what about the charities that have only one responsible person, for example, CEO? Do they need to report to ACNC their salary?
Well, that's an interesting question. Yes, there are some charities with only one responsible people published on the ACNC register, but this reporting requirement is not only looking at responsible people. The concept, the scope of key management personnel also include other senior executive. So those senior decision makers that can make, for example, strategic or key financial decisions for charities, and sometimes they might not be a responsible person that is published on our register, but they are still within the scope of this. So if there is only one responsible person being remunerated and there is none other senior executive, then the exemption will apply because at the end of the day, it's only one single individual being the key management personnel. So, and that exemption will apply. Does that clarify the question for Nina?
I guess so. We have a comment from Craig, and he's like, glad to see that individual privacy has been addressed. Then we have a question from Caillou. With key management personal remuneration, ACNC mentions that medium charity preparing general purpose financial statements need to report. So medium charity needs to apply. Is this accurate?
Yes, because I know the legislative requirement is only for large charities to prepare, to disclose that information to the ACNC, but for medium-sized charity, because the existing conceptual framework under the ASB will still allow a charity to self-assess as a reporting entity, and that's why a medium-sized charity can prepare general purpose financial statements. And because they prepare general purpose financial statements, they would apply and comply with all the applicable Australian accounting standards, including the ASB 124 or including the relevant disclosures under the ASB 1060 under Simplified Disclosure Framework. So both of them would have some disclosure requirements about related party transactions for all charities that self-assess as a reporting entity that prepare general purpose financial statement. So that is not a legislative requirement, but because of the compliance of preparing a compliant general purpose financial statement, and hence those requirements is part of that disclosure note.
Yep, we have one more question from Diana. What if there's only one responsible person, say the CEO, but the position has changed during the year? So effectively, there were two people working as CEO during the year at different times. Does the exemption apply?
Well, that's a very interesting question because the exemption applies for a single key management personnel is at any given point during the financial year, whether they have more than one. So if the person move on and another person step in, that means there are two remunerated people, for example, then the requirements would apply. But if the person simply leaves the role, but there's no other people filling that position until the end of the year, that means at any given point during that reporting period, there's only one remunerated responsible person, and then the exemption will apply, and they are not required to report the key management personnel remuneration.
Okay, maybe we'll take a last question from Craig for now, and then we'll take the rest after the second part of your presentation. So Craig is asking, sometimes volunteers are paid honorarium and have expenses paid. So they're technically volunteers, but do receive financial support from the charity. Would this need to be reported?
Well, a volunteer sometimes is hard to be in the key management personnel category because they might not be a senior decision maker. And assuming that volunteer can be in that position, for example, because the definition of key management personnel compensation defined in the Australian Accounting Standard includes all forms of consideration pay in exchange for their services. So my understanding is yes, honorarium would be a form of compensation, a consideration received by the person, and it is captured and required. But generally, those amount is not a substantial amount. It could be a very nominal amount, and because of I just want to mention one more thing, because the preparation of financial statements has a materiality overlay on it. So if it doesn't satisfy the materiality, then it may not be required.
Thank you, Eric. So we do have a few more questions. We'll let you carry on with your presentation, and we'll take the questions in the second half, if that's all right.
Sure. Thanks, Yushi.
Sure.
All right, let's move on to related party transactions. That's a very interesting topic, and it is another big reporting change. The collection of this information, I feel that it could be very challenging for many charities to adopt. And firstly, let's look at what constitutes a related party. The definition that we use at the ACNC actually varies according to the size of a charity. For a small charity, a related party means a person or an organization that a charity has a connection with. And this definition has a second limb. That person or organization must be able to have significant influence over the charities. So the two key components are the connection to the charity and being able to exercise significant influence. So for example, working as an employee or a volunteer does not automatically make someone a related party. It satisfies the connection component, but to be a related party, the person or the organization will need to be able to exercise significant influence over the charities. And for example, as I talked about earlier, charities, for example, they have the ability to make strategic or key financial decisions for a charity. In terms of medium and large charities, the definition of a related party is within the Australian Accounting Standards Board Standard 124. It also includes control or joint control element. For example, it includes all the parent entity of a charity, a subsidiary, an associate, or even a joint venturer. And terminologies are not easily understood by a small charity, and let alone they are not required to prepare a financial report in accordance with Australian accounting standards. So there is a simplified way. So we apply a simplified definition for small charities to report related party transactions. But for medium and large charities, because there is an existing definition in the Australian accounting standards, and that's why the guidance will have differences depending on the size of a charity. And in talking about a related party transactions, it actually means between that related party and the charity, there's a transfer of resources, services, and sometimes obligations. And transactions don't forget, transaction can go either way. It can be money going into the charity's donations or other sort of support to a charity, and it can be money going out to a related party from a charity. For example, a charity could purchase some sort of goods and services from another separate entity or company that the responsible person of the charity happen to be the director of the other company. So this is the sort of the common transactions that we see, and all charities, except for basic religious charities that I have to clarify, will report related party transactions in the 2023 annual information statements. And for medium and large charities, under the amended regulation, they will apply the ASB 124 or the relevant applicable paragraph under 1060, the simplified disclosure standard, to include a disclosure note about the information of their related party transactions in their annual financial reports. And as I mentioned before, the information in the annual financial report is subject to a materiality overlay, and it's also subject to external assurance, either a review or an audit, depending on the size of that medium or large charity. So let's move on to the next one. An important thing, I think, on this slide that just reminds me to say that all charities need to understand it is completely fine, it is completely okay to have related party transactions. It is very common, and sometimes it is inevitable to have related party transactions. It can bring many benefits to a charity. It can be donations from responsible people to start up the charity, for example, and it can be discounted goods or services provided by a related party to a charity. But the nature of a related party transactions give rise to conflict of interest because it involves another party which is related to, which is a related party. So the most important part here is for a charity to carefully manage these transactions to ensure they are transparent, they are in the best interest of the charity, and any conflicts of interest are appropriately managed. So looking at the next slide, linking back to the reason why a charity regulator requires disclosure of related party transactions, it is a piece of information, and it is also a matter of public interest, especially in the context of a charity that is a not-for-profit entity. It is to promote the transparency and have that information in the public domain to help the public trust and confidence of the charity sector. And I suppose we can spend a lot of time to talk about all the reporting requirements, but at the heart of this, it is all about a charity having good governance in place. There are requirements under governance standards, under the ACNC governance standards, to ensure that charities keep certain records, financial records, operational records. So that's just a reminder to say that don't look at reporting of related party transactions as a compliance tool. It is actually a tool that you can use to look at your charities, to look at how effectively a charity managed these sort of transactions to make sure they're in the best interest of the charity. So let's look at the next one. The ACNC has plenty of guidance materials around managing conflict of interest, and we also publish a guidance about related party transactions. A couple of links are included in the slide here. And I just remembered we also have recorded webinars. If you want to and have a look at on our website, acnc.gov.au/webinars. Scroll down and select the relevant topic. So yes, we have many educational materials on our website to help charities to assist the sector to fulfill these reporting obligations. Let's quickly have a quick look at how charities can prepare for this. At the moment, we are already in the 2023 reporting periods. So when it says it's all about planning, I think it's more about a reality check, is to make sure that the charity understand this requirement, understand what these changes are, and make sure your charity or your charity client is taking the steps to manage this internally. If they do have transactions that they engage with their related parties, it's time to check if they have developed appropriate systems, controls, and processes in place to be able to report these transactions by the end of the financial year. I did talk about adding these new reporting requirements in the upcoming agendas, in the charities meeting, the board meetings, or whenever next time when you meet with your charity clients. If a charity is big enough that it has, for example, a finance manager or someone who pays their accounts or does the overall administration, invite them as well with the board members and senior executive, because everyone needs to be aware that there is no misunderstanding. Everyone is clear on their responsibilities, who is going to be impacted by these, and what charities may need to do. And I can't underline the importance of that anymore. It is really important to discussing these requirements, circulating the information, promoting the awareness, using the ACNC guidance, and now is also an opportunity to take actions to fill any gaps, if any, in the governance process. So how effective is your policy dealing with this sort of transactions? Do we have a policy? Do we have a conflict of interest register? Are the charity staff aware of it? Are they using it? The ACNC has developed a template register for recording related party transactions. Is published on our guidance page of related party transactions. There's this template register. Does that help my charity? Does my charity need more advice on these sort of matters? These are all the things that charities should start thinking about, and should be already doing it. Looking at the next one, promoting the awareness, again, is so vital, because everyone understands how challenged this can be, and what it means for my charities, and what it means for the individuals who will be captured by these sort of requirements. Have we considered about other key stakeholders who may use the information that my charity prepare and publish this information in the annual information statements or in the financial statements? They are all available information on the ACNC charity register. So think about all these sort of things. Again, they are very important for charities to take action now, because we are already in the reporting year. And today, the ACNC has not yet finalized on exactly how the AIS, how the annual information statement, how the questions in the annual information statement will look like. The way how we collect this sort of information, but please stay tuned and watch out this space. What I can share today is that we have been thinking and working through a few options to implement the collection of such information in the annual information statement. The key important thing to know is we want to strike the right balance between transparency and and avoid any unnecessary regulatory burden. And we will communicate this in time. And at the moment, it's important for charities to put in place a system control process to enable reporting. And whatever the system that needs to be in place should have been working now, and it should have generating data and be in a position to provide data from 1st of July. So yes, I think this is most of the contents that I want to cover today. I summarized a few key takeaways from in the next few more slides. So basically, I'll just quickly go over them. For the 2022 annual information statement reporting periods, large charities will commence reporting key management personnel remuneration unless an exemption apply. And from 1st of July 2022, all charities must be in a position to report and record their related party transactions to enable such reporting by the end of the year. And from the 2023 annual information statement reporting period, all charities will provide those information to the ACNC, and we have published guidance to assist the sector to fulfill these obligations. And please read our guidance. And lastly, talk about the changes with all the professionals, advisors, accountants, auditors who can help you to understand and meet these requirements. So I will hand it back to Yushi to open the floor for any other questions that we didn't cover.
Thank you, Eric. Thank you so much for your presentation. There was a question from Jess, which was in the first half of your presentation. So we'll take this one and then take questions from the floor. People who are online, feel free to put your questions in the chat box, please. So Jess was asking, do audit and risk committee, so external members, fall under key management personnel so paid?
External. Sorry, can you repeat the question again?
She's written, do audit and risk committee, so external members, fall under KMP?
Well, if it is an internal audit and risk committee members, and they are able to so if they are key decision makers of a charity and employed by the charities, yes, they are within the scope. But if they are external members in this audit and risk committee, then they are not, because the reporting is for, let's say, the staff member, the key staff members at the high level of a charity to include their remuneration. It does not include any other external members. But there could be scenarios where an accounting firm can provide an audit member to work in the charity as an internal auditor, for example, and they pay the fee to that external firm to provide that sort of service, and that will be captured under the key management personnel payment to that external separate management entity. So it really depends on how this is structured, because given that limited information, I might not be able to provide the clarity, but these are the things that they should take into account.
Thank you, Eric. So 2 comments. So I'll read those comments and then take questions from the floor. So Michelle is saying, Eric, thank you very much for a clear and concise presentation. And Jess has said, thank you, Eric, very insightful. Questions from the floor? Yeah. There we go. Hi.
Okay, so if this is probably a basic question, but if it's a not-for-profit but not a registered charity, does it still have to sort of conform to these requirements as well?
No, this only applies to charities that is registered with the ACNC. So it's only for charities that have a charity registration granted by the ACNC, and this, because this requirements is under the ACNC, the Australian Charities and Not-for-Profits Commission's regulation. So it only applies to a not-for-profit entity that has a charity registration, but it will not apply to other not-for-profits that is not an ACNC entity, but they can consider the ACNC reporting requirement as a best practice. So if they think that will be helpful, I will encourage them to look at what the requirements are, but it's not required.
Okay, because you quoted AASB 124, and that's a bit general too, so.
Oh, yes. If that not-for-profit entity has its own governing documents to indicate that they have to prepare a financial statement in accordance with for example, the ASB, the Australian Accounting Standards, then they will need to consider whether those disclosures will apply to their situation. But the scope that we are talking about is only for ACNC registered charities today.
Okay, thanks.
Thank you. Do we have any more questions on the floor? Yes, there's one here.
Hi, I just have one question in relation to the related party transactions. I was just wondering, more from an accounting point of view, is if any related party within the definition, they sort of give a loan to the organizations, does that count to be disclosure items? Or let's say if they're actually doing it at this moment and they're not reporting or anything, that does come within the legislation as well with the new one?
Well, assuming that we are talking about a small or large size charities here, am I correct?
I believe mainly large ones.
Yeah, okay. So because for large size charities, the disclosures, the application of the accounting standards, as I mentioned in the presentation, is subject to a materiality overlay. So it's all depending on, well, let's put it this way, the application of that materiality is about a test, whether including that information will change the decision making for a person that relying on the information in the financial statements. So this is not a definitive yes or no. And if you think that is a piece of information that will change, that is likely to change someone's decision, then it would be better for the financial statements to include this sort of disclosures. And I will also encourage you to discuss with the auditors about the scope, about the reporting requirements of this sort of arrangement, because the loan that we are talking about, the disclosure need to look at the relationship with the related party. We need to look at the nature or to describe the transactions. If it is a loan, is there any terms and conditions that are associated with the loan? Is the charities repaying any sort of interest back to the person giving out or the entity giving out the loan? Is it in the best interest of the charities? These are all the things that need to be considered altogether. As I said, the reporting is one side, but the most important part is the heart of this is whether the charity has considered about the risk associated with all the related party transactions.
Thanks, Eric. Any more questions in the room? No? There doesn't seem to be a lot of questions today. I think it was a very clear presentation. We do have Ashish who said, thank you, Eric. Hope you'll be sharing your presentation. So the presentation has been recorded and we'll be sharing that recording in due course. So it could be by next week. Any question from anyone online or any comments? No? So it looks like we might be having an early mark. Yes.
Sorry, Craig Fano here. Can I ask a verbal question?
Yes, Craig, go for it.
So imagine you had a basic religious charity that had a subsidiary entity that was also in itself registered. Do any of these, so I know a basic religious charity doesn't have to report, but just say there's an overseas aid organisation, but that was quite large, would it still be captured within both of these applications?
Correct.
So
Yes, because you mentioned a very important factor there is because that sub-entity is individually and separately registered with the ACNC. So if that sub-entity has its own ABN and individually appear on our ACNC register, which means a separate registration has been granted for that sub-entity to do the overseas aid work. Yes, this because they don't, for that sub-entity itself, it can be a subsidiary of a basic religious charities, but let's look at the scope or the boundary of this reporting requirement because it's in relation to that sub-entity itself. And these reporting requirements applies to a registered charity and at the entity level, not at the group level. So if that sub-entity is individually registered, and these reporting requirements will apply.
Okay. Any more questions? We do have 9 minutes. So, and Eric's here. We are not letting him go anywhere for 9 minutes. No, okay. Joseph has said, fantastic presentation, very appreciated. We do have a few thank you for your presentation. So, yep. Any more questions? I think someone was trying to ask a question online. No, not really. Did you have any final comments, Eric?
Yes. Well, okay. That's a question for me, Yushi. Thank you. I think with all the accountants and in the room, I know the Australian Accounting Standards Board recently released a discussion paper about Tier 3 financial reporting, which is a new tier intended for charities and other not-for-profits to prepare a different sort of simplified standard, a further reduced standard for not-for-profit entities. So I would really encourage, if you have time to look at the materials. I think they have a snapshot document that summarize all the changes that they want to ask feedbacks. And I think accountants at the front line are best placed to provide response or feedback to the Australian Accounting Standards Board for their standard setting process. So I would just want to take this opportunity to encourage people in the room to look at that discussion paper, because that may have a significant impact or changes later on down the track that would have that will change the financial reporting for charities and other not-for-profit entities.
Okay. Maybe a question from me. Given your experience with charities, and you know how sometimes we don't have the resources to be able to prepare necessary accounting information, what if a charity is really struggling but they're trying? Is there any support available other than, you know, those videos from the ACNC?
Yes, that's why one of the big focus of the ACNC is to develop as much guidance and supporting materials, especially in the context of small size charities. And we use simplified language. We're trying to avoid using the terminology referred to by the Australian accounting standards. We're trying to simplify things, excuse me. So even thinking, sorry, even about the related party transactions, we have been thinking, what is the easiest way for charities, for small charities to report on it? So we sort of simplified the definition, we limited the scope of their reporting. Yes, and we have developed different sort of resources. And there is also a national standards chart of accounts that charities can, that the ACNC publish on our website, that some charities with limited resources they may not need to redevelop or think about how they structure their accounts. There is an existing one that they can use. There are plenty of other ACNC resources, and feel free to contact us, and we have an email listed at the end of this slide here. Contact us if you are not sure where you want to find the guidance from the ACNC. We try to put all the things that we together that's reporting related into what I call a little sort of a hub with all the relevant links about the streamlined reporting arrangements that we have in place with other states and territories. And wherever possible, we try to simplify this. So yes, I hope that will help. I think the ACNC website is the first go-to place if charities will need help.
Thank you, Eric. Thank you. So a last comment from David, and he said, we are organizing opportunities for not-for-profit people to help develop feedback to the AASB on Tier 3 reporting. Yep. Okay, so if we don't have any more questions in the room or online, we'll have to wrap it up quickly because most people are on their lunch break here. Just to let you know, our next discussion group would be on Monday, the 7th of November, and Vicky from Philanthropy Australia will be presenting. Vicky will be talking about, so it's talking to clients about giving, benefits, trend, and how you can help create a more generous Australia. So thank you very much, Eric. Thank you for your time. Thank you for this fantastic and very detailed and insightful presentation. Thank you, everyone. Have a good one. See you in November.
Thanks
Thank
all.
you.
Bye.
Thanks, Eric. Thanks, Ushi. Really appreciate it.
Thank you, David. Thank you.
Take care.
Take care.
Thank you, David. Bye.